good afternoon, everyone. Good evening. Thank you, Bangalore branch ICI. It's indeed a pleasure always to be here. I've had a very old association with the branch, almost 15-20 years now. So we have the current test match going on, 3-0 we won. So like in every test match, there is lunch and then there is tea. Not many times the session after tea is also interesting, apart from the first and second sessions. And we just saw the concluded match. I think after tea 9 wickets fell, right? Fourth day, and we won 3-0. So I'll try to make it as interesting as possible. Of course, GST, it's a very interesting topic. You can speak, as much as possible, but it's never enough. I think the Bangalore branch ICI has done well to divide it into the three sectors: manufacturing, services, and trading. So we get a flavor. We had a wonderful session by K.S. Kumar. He's a very good friend of mine. He's a very good professional colleague. He's also, in a way, my mentor. There are a lot of things I look up to him. We've worked together on a lot of professional engagements and institute engagements. We've done a lot of professional work together. So it's indeed a pleasure to be attending his session. And thank you very much for the audience. I think we've turned out in large numbers. Considering it's a Saturday second half, and considering I think we have the busy tax audit season, I'm given to understand I think the due date has got extended. So a very warm welcome to all of you. Now we have about roughly 1.5 hours. I'll try to highlight the key issues under the trading sector or the key implications. Much of it may be covered by Sai Prasad or Naveen Kumar. I think what I liked about K. Naveen Kumar, this thing, he focused specifically on the service sector. Sai Prasad would have covered manufacturing, so which may be a bit overlapping with trading, because now under GST, what is manufacture and what is sale of goods has gone forever. So you may feel that okay, some things which I speak may already have been spoken earlier in the day. So as we all know, the concept of supply. So hitherto we had the concept of manufacture, services, supply. Now supply, it's a paradigm shift, because right from 1944 till now we've known what is manufacture, what is sale, what is a service. Service is a new concept from 1994. Sale is a very, very old concept. Sale of Goods Act 1930. From a trading perspective, if I have to say, I'll not get into what is manufacture. Manufacture, of course, we have Central Excise Act. Let me tell you, the word supply will be more complicated than what is manufacture. We used to dread interpreting what is manufacture, right? So manufacture includes 2F, 1, 2, 3, subclauses 1, 2, 3, Central Excise Act. You cannot define what is a manufacture, right? Because every industry, every small or big process is so unique that there cannot be one concept of manufacture, which is why the word manufacture has been one of the most litigated topics. And I'm sure Sai Prasad has done well to cover that. Sale is more, I would say, sale was more restrictive. I will not say in the true sense, but yeah, it was more well defined. Because sale we have defined in the Constitution. We have the Sale of Goods Act 1930, right? Pre-independence era. So we all know what is a sale of goods or transfer of property in goods between the buyer and seller. Why I'm insisting on sale is obviously because this session is all about trading. And trading, the traditional concept of trading right from the last 100 years is primarily a sale, right? Traders who buy and sell. They may or may not manufacture. They may or may not render service, right? So there are a lot of manufacturers who are into trading goods. There are a lot of service providers who are into trading. There are a lot of traders who also render services, and then there are pure play traders. And obviously with time, with technology advancement, we've had the concept of malls, cash and carry, wholesale, retail, big bazaar, e-commerce, right? So the concept of trading has really evolved in the true sense as far as the practical business is concerned. Obviously, we're seeing it. It has become part of our day-to-day lives to do shopping from Amazon and Flipkart, right? That is how integrated trading is to our lives. Anywhere, any newspaper you get, the first 5 pages is only about the 70% discounts what you're getting on the e-commerce websites. So the whole thing about this consumerism, the consumer spending is right in your face. So I think trading is a very, very important for us, a sector for us to understand. Within trading now, it is very difficult to pinpoint because you have pharmaceutical, you have consumer goods, you have FMCG, you have consumer electronics, and so and so. And the India growth story in the past and in the future is a lot to do with consumer spending, consumerism, consumption. India is viewed as a huge consumption market, right? So most of the countries are coming to India. It's one of the fastest growing economies, primarily driven by consumption. So trading business, I would say more than manufacturing, is at the very core of our economy. Although services form 60% of GDP, but from a consumption perspective, that is from a rendering perspective, from a consumption perspective, the growth what is predicted is the consumption. So when I say consumption, there will be more sellers. So when you say more sellers, the trading sector can only increase. And it's a very exciting time to be in the trading sector, I would say, purely from a business point of view, right? So we hitherto have understood the concept of sale. Now obviously, as I said, manufacture, sales, services, everything has become supply. And Naveen elaborated hugely on what is supply, purely from a service tax perspective. Now, as he correctly said, supply includes. So we have a very, very inclusive definition. All forms of supply. You include sale, transfer, barter, exchange, license, lease, rental. Then there is import of service with or without consideration. Now, what will happen is supply includes without a consideration is also a subject matter now of taxation. Now, this is a huge departure. If I compare the current VAT law, what it says is, you take the example of a Karnataka VAT law or the GST law or the Karnataka VAT law. If you see the definition of a sale, it is transfer of property in goods from one person to another for valuable consideration, for cash, deferred payment or any other valuable consideration, which means cash or cash equivalent. Till that element is not forming part of the transaction, the definition of sale fails, which it collapses, right? And that is the entire foundation on which the trading community or the trading sector stands on today. If you look at a pure buy and sell model, I am not going to get into manufacturing and services. You can have a lot of combinations. So the path-breaking departure under GST will be shifting from sale to supply. The definition we have seen is hugely different. It is wide encompassing, and it is for a consideration. Now that consideration may or may not be in money terms. So now this is again a paradigm shift in the taxation as far as the trading sector is concerned. Today, if you don't have a monetary consideration, there is no sale. Because if you see the definition of sale, there has to be a valuable consideration, which means maybe a barter transaction is not liable to VAT, right? But if you see the scope of supply, it includes sale, transfer, barter, exchange. Now what is sale? What is a transfer? What is a barter? What is a barter is not been defined. What is an exchange? It has not been defined under the model GST law. I would even say supply is defined in the model GST law. If you see the Constitution Amendment Act, the Constitution Amendment Act of 101, which was Constitution Amendment Bill 122nd, the word supply itself is not defined. So there is goods defined, there is services defined. We have a concept of deemed sales, 366(29) capital A. Has anybody seen the definition of supply in the Constitution Bill, which was a subject matter of huge debate in the last 1.5 years in our country, and now that has become a Constitution Amendment Act 101, right, from 8th September, I have the official gazette. The word supply itself is not mentioned in the Constitution. Supply is again the foundation on which your GST stands. Today we had manufacture, it was not defined, but we had services and sales, or at least sales or deemed sales defined in the Constitution. Then came the service sector, it was levied under entry 97 of list 1 to 7 schedule. Any other matter not enumerated above. Technically the word service was never defined under the Indian Constitution. We are now again looking at the word supply not being even defined under the Constitution, which was a subject matter of huge amount of debate. So it's a very important point to understand that the word supply is nowhere mentioned in the Constitution or defined. Maybe it's mentioned. It is not defined. Now something which is not defined in the Constitution, can the Act define it? I will leave that to time. Even I don't have answers. Maybe we will have cases there. But it's important to keep that at the back of your mind. Because every state tomorrow can just stretch this definition. We are looking at November and December, Naveen said. We are coming out with a draft law. This is a model law. We are expecting the draft acts. The winter session is going to be preponed. The draft act has to come out. Draft IGST Act, draft CGST Act, and all 29 states SGST Act. I just hope every state does not come out with its own version of supply. That's one thing. Then consideration. In fact, for the trading community, if there was no monetary or equivalent consideration, sale used to fail. Now that is a paradigm shift. All those things and concepts we will have to relearn. Right? So that's one huge impact. In fact, it's a huge impact without getting into the detail in the real estate sector. Something which was a barter, landowner giving up his land and me getting flats, that was a subject matter of huge, still litigation is there. There are court decisions where they say it is a barter, it is not liable to works contract and bad and things like that. All those things will change. All those things will change. Then you have Schedule 1, which defines certain categories without the consideration. So we have seen supply, definition of supply, I have it illustrated here. I have not verbatim reproduced it like K.S. Naveen for the sake of brevity. I think it was good that, and I'm sure Sai Prasad would have dealt it and K.S. Naveen Kumar has dealt it. So my idea is to highlight the key points without getting into detail the verbatim definitions. Right? So supply, we have an inclusive definition. Right? So there is a lot of issues here. We will have a lot of interpretations. There is a lot of chance that tomorrow a supply which may not per se be an economic activity itself may be a subject matter of taxation tomorrow, be it either for goods or for services, more so ever for services. Because services of supply of services or or import of service with or without consideration, whether or not in the course of business, is a subject matter of taxation now. Right? So same way, supply of goods also, it may or may not be part of an economic activity, because again one of the basic tenets of any taxation law is it is linked to a particular economic activity. I just hope the personal supplies are not a subject matter of taxation under the GST law. Hopefully it should not be. That is not the intention. Now supply, it is negative impact. So I have made it in a very summary format and I have used just the key words, because when we say impact, I just want to throw up some, in my next 60 minutes, throw up some 8 to 10 ideas or 10-15 ideas which will impact the trading sector. There could be more ideas. The law is very new, and as new to the law as everybody here, my learned friends, there could be a difference in view. I may not have answers to all the questions because the law is very, very generally worded. K.S. Naveen Kumar said it is pro-revenue, it is very generally worded. Anything which is not goods is service. Anything, the word anything means God knows what. Immovable property, is it a service? So these words anything, this words includes, scare me. Right? But when it comes to input tax, it is input tax means and subject to exceptions. Right? That is again scary. Because the supply covers the universe, input tax is a very small corridor now. And you can't even stretch, you have to walk like this, the corridor of input tax. Right? Whereas supply is a corridor where even 10 elephants enter, it is infinite. Right? So supply, if you see the impact of the term supply, it is going to be negative, as the scope of supply is vast compared to the current definition of sale, for reasons which I have just stated. Supply to consignment agent, which hitherto was a subject matter of an exemption or not a subject matter of sale, because in the absence of a valuable consideration, will now be, because supply to consignment agent will be taxable. Free supplies could be a matter of taxable, without a consideration. If you see Schedule 1, right? Buy one get one free. Now trading sector, when we start talking about trading sector, you go to Lifestyles and Shoppers Stop, you have either 50% discount or buy one get one free. So all the consumer goods companies or the consumer electronics companies, this buy one get one free is in the FMCG sector, I would say, the consumer electronics industry, in the consumer industry, in the apparel industry, textile, garment, whatever we call it. Free supplies could be a subject matter of tax, especially buy one get one free. So there is a difference between you get a 50% discount or you buy 2 Peter England shirts, the third one is free in lifestyle. You have to see that. You will have to redraft your business distribution strategies or your dealer incentive strategies or your retail strategies. So free supplies could be a subject matter of taxation. How will you value a free supply? Again, that is subjective depending on the transaction value and the valuation rules, which itself, as Naveen Kumar said, again, the excise and customs transaction value concept has been brought into the VAT authority in the last 60-70 years, the sales tax and the current VAT authorities have not had a chance to deal with what is a transaction value. They have had the transaction to deal with what is a taxable turnover, what is the sale price, which is a very simpler concept compared to what is a transaction value under the excise and customs law. So they have virtually cut and paste the concept of transaction value and the valuation rules from customs and excise law to the modern GST law. Right, so such is the ramification of the trading sector as far as the GST law is concerned.
Excuse me, I have a question here. When you say buy one get one free, do you think each of these shirts will have two values to be attributed and be taxed on them?
Yeah, so no. So if something is sold free, even that item which is sold as free could be a subject matter of taxation, is what I'm trying to say. It depends on the valuation rules. It depends on what is your discount schemes. You may say buy two, the third one is 50% discount. You may say buy two, third one is free. So there is a difference between discount and free.
But they totally include the third one or second one.
Sorry?
The value include the third one.
No, that is not. How will you prove it? So when you say free,
Value, isn't it?
yeah, exactly. So there is only transaction value. There is no other concept of valuation prescribed. Right? So there is a good chance it will be a subject matter of taxation. How will you value it? We will have to look at the valuation section, which Naveen has said, and the subject to valuation rules. Because that is the only yardstick, which could be highly subjective. So the only way I see buy two get one free is if it is comparable. What you are charging for the first two shirts, please charge it for the third shirt also. That is the only way. I mean, I can just give you an off-the-hand example. Still, that's a very, very plain, vanilla, simple example. In all situations, things may not be that simple. Right? Because if you see the definition, if you see Schedule 1, supply of goods or services by one taxable person to another taxable or non-taxable person. Which means what? If I as a consumer go and buy one third bigger England shirt free from Shoppers Stop, I am a non-taxable person, Shoppers Stop is a taxable person. It falls within the Schedule 1 of supply without a consideration. That's one thing. Then supplied by one taxable person to another taxable person, interstate stock transfer. Registration under GST is again a game changer, purely more so from a service and manufacturing sector, not maybe that much from a VAT perspective as far as the registration is concerned. But the fact that now you have to take registration state-wise, it will have some ramifications as far as the interstate stock transfer is concerned. Because as far as the GST law is concerned, even though you may be having one pan-India, one single entity, right? But you have to get registered in each place or each state wherever you are doing your business, right? Wherever you have a place of business, as K.S. Naveen Kumar also said, which pretty much we do the same thing today. In fact, whichever the states we have a business presence, or we have a godown or a depot or a warehouse, or a stockist, or a consignment agent, we register that, right? But the ramifications, which means today's stock transfer, you can claim exemption subject to conditions. Under GST tomorrow, especially for the trading community, if you do a stock transfer from one state to another, it is a subject matter of taxation, clearly. And that is what now the FAQs have also answered. Earlier there was an interpretation, till maybe issued till say about a month ago, that interstate stock transfer, how can it be a subject matter of taxation? So again, this is a huge game changer. What I am saying is, every sector, the moment you touch these main points, you have to really, as a businessman, re-evaluate. And which I feel, it's a game changer for the businessman, and it's a wonderful opportunity for all professionals to be a good guidance to your client and to be a good business advisor or a tax advisor, right? So interstate stock transfer will be a subject matter of taxation, hitherto which the trading community was not used to. So these are the major ramifications again on the trading sector. Then books, as Naveen said it now, there are certain services which were hitherto declared services under the service tax law, which were right now are, right, works contract services. Somebody mentioned food and catering supply, then software services, right? So they are a combination of goods and services. So what the government has done, rightly or wrongly, but it at least gives me certainty that, okay, construction services, works contract services, which had overlapping goods and services, right? Now it is put to rest that none of them are goods, they are all deemed services. Software is deemed services. Because software again, it was one sector where, and especially in a city like Bangalore, which is the IT hub, we have a double taxation issue, huge issue. Any software you buy, there is a VAT and service tax. So now all those controversies by one single stroke of law have been put to rest, that all these the real estate sector, the software sector, wherever the trading community is involved there they have certainty. Now, depending on your maths and economics, you have to see which sector is more favorable. What is the average incidence of tax suffered today when you buy a flat or when you sell a flat as a builder, and how much will the incidence go up to under the service tax under the GST scenario? What is the software service taxes you are paying today, and how much will be the taxation on software under the GST scenario? So just to take the software sector, I will not get into the real estate sector because that is closely linked to the trader community. Software, if we have to take a 15% service tax and 5.5% under the Karnataka VAT law today, there is a 20.5% hit, and hopefully if we have a 18% GST, there is a clear benefit of 2.5% we are looking at. I am assuming the GST will be at 18%. If the GST comes at 20%, then we are by and large the same. Right? So that is one of the major implications again. The other aspect is, despite the GST law being so much widely spoken about, it is rather very, I would say, unfortunate that right from the definition of the scope of supply till the end, there has been this distinction which is retained between goods and services across the laws. They have separate schedules. There is that, so which again goes against the very basic of spirit or the tenets of the GST law. Maybe certain specific items of day-to-day importance, they could have kept it out of the tax net and kind of say that okay, irrespective of whether you sell goods or services, it will be a taxable supply, and not necessarily what is the supply of goods and what is the supply of services. Again, that is one huge ramifications of the trading sector. Having said that that there will be a distinction between goods and services, what the government has done good is, if you look at the Schedule 2, as again K. Samir Kumar mentioned, they have now put to rest controversies as to, at least they have defined, see today what the businessman requires, nobody minds paying tax, as long as there is certainty and as long as the buyer gets a credit, unless it's a B2C transaction, right? So there should be certainty in tax law. Equity and certainty are the two cornerstones of any tax law, right? Equity, fair and equitable, and there should be certainty. So we cannot rip tickle every time we buy something, whether it is caterer mein VAT service tax. Now every day you go to a restaurant, 30% of the bill is bombarded with VAT service tax service charges, right? And have you wondered why some restaurants don't charge VAT? Because they are under the composition scheme. Now unless you don't practice indirect tax, you will not know on this. Right? So have you ever wondered some shops or some restaurants why they charge only service tax, and why some shops or some restaurants they don't charge you VAT and they charge you only service tax? The only reason I can see is because those restaurants will be either not covered under the tax net or they will be composition dealers. Because composition dealer is not allowed to collect VAT from the buyer. All those distinctions will now be removed. So having said that the differentiation is maintained between goods and services, it will greatly benefit the trading sector apart from the service sector. So trader knows when I am getting into something, what is my classification. It is going to be it will be certain. I am not saying it will be much more easier. Still there will be, because see, the fact that you will have differentiation in goods and services, there will be some provisions in the law where you have separate schedules of what is goods and what is services. So there again you will have some overlapping classification issues, this, that. I am not saying those issues overnight will go. And let's be very fair, overnight it cannot go because we are a very, very vast and diverse country. Even in the European Union, our VAT and the GST law is by and large taken from the European Union, specifically the interstate transactions, right? It is not possible to have such amount of uniformity. European Union, different countries, they have different rates of tax. They have different exemptions, this, that. So you expect some amount of disparity amongst all 29 states. Hopefully the disparity will be less compared to what our experience under VAT law has been in the last 10 years, where I think each state just went into one different direction as far as the VAT rate was concerned and the compliances and the procedures and things like that. So hopefully the disparity should not be that much, but some amount of disparity you have to live with. You can't help it.
I have a question. So the piece of software, the VAT and service tax both are applied. So government was not clear and we were not clear whether it is goods or services. Now that the government is clear and they have said it is services, can we apply this rule and go back and say, now look, you guys are clear, can we resolve the older cases and say these are all services?
See, there is something called a transitional provision. And Naveen Kumar said, pending litigation, right? He's a litigation lawyer. So all the old issues will be decided as per the old act.
Which is not fair, no?
Old issue cannot be decided by a new act. Huh? And please don't get old issues in the new act and don't get new act into the old issues. Or don't get new issues in the old act. I would rather put it that way. So hitherto we are used to some sort of a cardiac, not arrest, if pain. Let us continue that pain first. As he said, some karvayadan will come. Please go that corridor, sir. Don't even say you put the cart before the horse. So, and again now the law pertaining to software has also evolved. We've had some very, very crucial decisions from IBM and Infosys in the last year, Karnataka High Court, where they have by and large I feel clarified software taxation when it is customized, when it is not customized, when there is a transfer of code, this, that. So, but again the SECs are not taking a chance. I think any software they are, any seller of software, be it a cloud software or a physical software, they are letting patent service tax board. Here the only issue I see under the GST law is software is intangible. Anything what is intangible has been a subject matter or it is a service. If you see the definition of service, which means goods does not include intangible property. That is the definition if you see the definition of goods. The only lacuna here is, and which is rather an unintended lacuna, is software supplied on media. Right? By and large today, most of the software, even if you buy a Windows today and all, you just get a key, you have to go online and you will not get a Windows box, I think. It's all downloadable from the cloud and things like that, right? And you are just given one paper key, you pay, it give you an invoice, that invoice will have all VAT, service tax, everything. So, but whatever it is, whatever reason, if the software supplied on a media, now that is a lacuna. There is one school of thought it is still intangible because finally what you pay for the software is not for the media, it's for the IPR. The 90% value is the IPR in it. Although it is a copyrighted article, it is not a sale of a copyright, it is sale of a copyrighted article based on certain decided case laws for software under TDS, under income tax law. I will not get into that. So that is a bit of a lacuna if you ask me from a trading perspective as far as the software or the IT industry is concerned. That although they have said all the software is deemed services, what happens to, because software is defined, software is intangible and what is intangible is now part of services, because the definition of goods say it does not include anything which is intangible. Which is why by necessary implication, whatever is intangible and there is a definition of service, there is an explanation which says anything which is intangible now is part of services. So software now by necessary implication is a service. What happens when software is on a media? Probably when we have the second, third version of the law, hopefully those things should be clear. There is a school of thought it is a goods because it is a copyrighted article. There is a school of thought now what is sold is what is leased out or what the license fee is for the IPR and not for the CD. CD cost might be 20 rupees. 90% of the cost, if the software cost is 2 lakhs, 1,90,990 rupees will be put into the codes for what you pay.
But anyway, practically, nobody is going to sell his original rights to the code. You are only given user rights. You can use.
That's what I said, license fee. So, exactly. So license fee. Correct. No, what I'm saying is there is a view which exists. What happens to software? Whether either sold as a copyright or copyrighted article. What happens? Software being sold on a tangible media. Because what is covered under service is intangible. You get my point? And which is other than goods. And the definition of goods does not cover intangible items. Purely from that point of view, I am raising this issue. Right? So definition of goods, goods excludes anything which is intangible property. Definition of goods includes securities, but it excludes actionable claim. Now, what is the other huge benefit? I'm sure Sai Prasad would have touched upon this. There is no doubt GST changer. There is no doubt, but there are a lot of ifs and buts. Electricity, real estate, and petrol, or fuel, which is the key to any industry. Which are the three key inputs to any industry. Without a land and a building, without power and without fuel, I cannot run my factory or my business. All these three sectors are out of GST. It is highly ironical when the GST law is so hyped up. The three key inputs to any industry are out of GST. that is a reality which we have to live with. If you put that thing aside, what is a game changer there? Especially now for the trading sector, and I'm sure Cyber would have touched upon this. Cascading effect of taxes. Today we are paying VAT and CST on price of goods, which includes the excise duty, and I'm sure Cyber would have mentioned all this in the in the beginning. But more so ever from a trader perspective, whether he imports or does an interstate purchase, or a manufacturer who manufactures goods and sells, because the moment the manufacturer sells the goods, he becomes a trader as far as the VAT law is concerned. So our trading sector is also sometimes very closely aligned with the current people who are manufacturers. So if you take a pure play trader, he may be buying something from a manufacturer, or he may be importing it either locally within the state, he may be doing an interstate purchase, he may be doing an import, right? He may be just so, and he by purchasing he may be paying VAT or a CST, right? So what is the game changer? The game changer today is when he resells, or when any trader sells, right? The base is common. On the same base you are levying CGST and SGST, assuming it is a intrastate supply. I will come to what is intrastate supply and interstate supply later. We have some defined codes of what is an interstate supply of goods, which I think is very, very relevant for our discussion. We'll take it up towards the end. So I think one of the main game changers, if you leave aside all the other aspects which I said, this GST is the pinch of salt we have to take, because as I said, the key three industries are out of GST. Now, having accepted that fact, because when we spoke last 2-3 years at the highest of levels in the government, they said this is the maximum we could do in the last 10 years. From 2006, 2007, it is take it or leave it. It is take it or leave it. Because the states don't want to give up all their revenues overnight. They want to test the waters. After 5 years, they will see whether to get motor vehicle tax, excise on alcohol, petrol, motor vehicle tax, or stamp duty, electricity duty, and so on under the GST net. That's a very long run. Probably in over the next 10-20 years only it will happen. If it happens, it cannot happen overnight. So that is the reality we have to accept and move ahead. I mean, if we just keep looking back, then whatever GST is given to us also will not, be of any use. So having accepted or digested that, which is I'm not particularly I'm not in favor of that thing that most of lot of the big items are outside the GST net. Having accepted that this is the GST structure, and apart from this we have a dual GST structure. So I had gone to Singapore a couple of years back, and my friend asked me, he's from India only, a very close friend of mine. So they are used to a 7% GST in Singapore, and obviously it's a small country, I understand. So when I told him it's a dual GST, the fact that I told him it's a dual GST, I could see the heaviness on his head. It's a dual GST. I said, Baba, if I start telling you all the rules and place of supply and all, you will collapse. So for some people, the fact that you have a dual GST itself, it's like a culture shock to them that, boss, if you are speaking so much about GST, if Indian GST is so much spoken about, why in the end have you got two GSTs? Again, that's a fact we have to accept because of the fact that 29 states in India are not cost centers, they are profit centers. Each state has its own local compulsions, social compulsions and things like that. They would not want to give up their taxing powers and probably be dependent on federal authority. And that is again the reality of our country. We have to accept it and move ahead. So notwithstanding the fact that we are dual GST architecture, so that architecture of the GST, the basic architecture is taken from the Canadian and Brazilian laws, because there also you have a multi-federal system and multi-state, GST, RST laws and things like that, or a harmonized sales tax law. Quebec province in Canada has its own sales tax system and things like that, right? So
when you're comparing 7% with us, please also mention the fact that the possible collection which is potential and how much is collected, there's a big gap, and hardly 3 to 4% of people pay taxes. So that also has its impact on the rates. We can't compare ourselves and say Singapore is small so it can do it. It is basically because everyone is compliant.
Absolutely, so no doubt about that. So we have to accept the fact that the key sectors are out. We have to accept the fact that we are having a dual GST architecture. So the basic architecture is taken from from Canada and Brazil. I would say the heart and the soul of the GST law, which is the core, the interstate transactions, they are borrowed from your European Union and the UK VAT law probably. And then some definitions of supply, they are taken across UK VAT law, European VAT law, Malaysia, Australia, New Zealand and things like that. Right? But the core of the GST law is taken from these three countries. European, the basic architecture is from Canada and Brazil, and European Union is where the heart and the soul of the GST law is borrowed from, as far as the place of supply of service and goods are concerned and things like that, and cross-border transaction is concerned, destination-based tax is concerned, the credit mechanism specifically, that the buyer will get the credit. That is the true destination-based consumption tax, right? As far as so that is at the very core and heart and the soul of the GST law, which has been borrowed from the European Union, and rightly so. So what is again the huge positive impact for trading sector is, leaving aside the those basic flaws in our GST system, right? The game changer here is on the same base now. There is no excise, and come excise, on the excise portion you are going to be paying VAT and CST, and then you are going to be paying freight and authorized and tolls and XYZ charges, and so on the same base you will levy center and state GST both. Now, a lot of my friends tell me they get confused, why on a local sale we will end up, CGST. So don't get confused. CGST, even though it is a central law, right? It is applicable only for interstate supplies of goods or services. That is one thing again I would just like to clarify, which I am sure a lot of us are already knowing here. And don't confuse CGST with CST, because CST, the present CST is for interstate sale of goods. That CST is now becoming, or will become, IGST, integrated goods and services tax. So what is the meaning of integrated? We as a nation will get integrated into one common national market, where the fiscal barriers or the tax barriers will go away, because the buyer will get the credit. So sitting in Bangalore, if I purchase goods within Bangalore or from Delhi, from a tax rate perspective, I should be tax neutral as far as the buyer is concerned. The only difference should be the freight cost. And other qualitative factors, if any. Right? So this is a huge game changer. On the same base, you will have CGST and SGST, which means inherently it will bring down your price of the goods as far as the trading center or the trading community is concerned. That's a huge game changer, I would say. Again, it is a very, very paradigm shift. And how do you monitor whether these guys are going to be passing the benefit of that to the customer? That will all play out. Just one industry or one company has to start passing on the benefit, the others will follow. In Malaysia, GST has been introduced last year on 1st April 2015. There is an anti-profiteering law which is there in Malaysia to ensure that the companies pass on the benefit of this GST to the consumer. So the Indian government is also thinking on those same lines. How and when, if at all, the law will come, not come, we will have to see. Assuming worst case scenario, the anti-profiteering law or mechanism does not come, market forces will play out. One industry has to start, if they are in a slump or a recession, which a lot of industries are today, if he starts giving, right, because on the same base if you are paying two taxes, right, the consumer, the selling price should be lesser. But today on excise duty portion you are paying sales tax, right? So that's a huge game changer. So today excise duty is 12.5%. VAT, assuming it is 14.5% in Karnataka, right? So 12.5 plus 14.5 is 27%. Plus 2% CST plus whatever, average incidence of indirect tax is anywhere between 26 to 28 to 30%, which is one of the highest in the world. Today, most of the goods what you buy, so even except some exempted or concessional rate, the average IDT incidence is anywhere between 26 to 28%. Which is huge. Now that is a game changer according to me under GST, because today if you are in an industry, be it trading or manufacturing, which is subject to the full rate of excise and VAT, you can only benefit under the GST law. The downside is, if you are in an industry which enjoys concessional rates or exemptions, like for example textile sector, they have, I think they have some optional, excise scheme 1.2% plus ready-made garments 5.5%. So total tax incidence is 6 to 8%. That will become minimum 12 or 14%. So if I am a dealer in textile apparels, I will not be benefited. I am just giving you a very top level flavor of some industries. I spoke about textile, I spoke about consumer electronics, because our session is all about the trading sector, right? So just giving you a flavor of some industries. And in any revolution, in any reform, some industries will be benefited, some industries will be adversely affected. Going down the line, market forces will play, you will get aligned to the market. So cascading effect of taxes, tax on tax, is going to be huge. I think huge positive impact, specifically for a trader. So basically, no SGST will be levied on CGST portion. The CGST and SGST will come together simultaneously and sit on your tax invoice of 100 rupees. Just to give you a very, very baseline example. And that is on intrastate supply. We will see how the interstate supply works. Pretty much on the same, but interstate transaction. What is an interstate transaction? We'll come to it later. So moving on, composition scheme we have today. There is a composition scheme envisaged even under the GST law, where the turnover, if it does not exceed 50 lakhs, subject to prescribed procedures and conditions, the composition rate will not be less than 1%. For certain dealers, we have to wait and see which of those dealers and things like that. So again, that is a big benefit. And obviously, the conditions will be that it is more for the small dealers where they are rather doing a localized trade in every state, which means you can't buy and sell interstate, you can't do import and export, you can't claim input credit, you can't collect the CGST or the HGST from your customer. These are the basic conditions for any composition dealer. So those things again probably continue even under the GST law. What will be that threshold? 50 lakhs, up to 50 lakhs. Now, who is the taxable person? We have a manufacturer, we have a dealer. There is an exhaustive definition of what is a dealer. Right? Under the GST regime, a dealer or a taxable person is who carries on business at any place in India and is registered under Schedule 3 of the Act. Today, the taxable person under the model GST law threshold is prescribed at 10 and 5 lakhs. There are newspaper reports of the GST Council proposing an exemption initial limit of 20 lakhs. We'll have to wait and see, but that's just an announcement. But if you just see the model GST law, it is still 10 and 5 lakhs. Registration is again huge. It's a game changer. As I said, more so for the service sector because centralized, service tax registration will go away. In fact, I'm given to understand a lot of service sector companies are representing to the government that please allow us the benefit of centralized service tax registration. Otherwise, we'll have to file returns in every state wherever our operations are. Anyway, but that does not really impact the trading sector as far as purely the registration formalities are concerned. Because anyway, if you are a dealer in more than one state, you have to get registered as a dealer in each state. Today also under VAT, right? So negative impact when I say it is more from a service sector point of view and things like that. Yeah, what is new which will impact even the trading sector is the concept of business vertical, which will be applicable across sectors, manufacturer, trader and service provider. So again, trading community is a very, very specialized community. If you are a manufacturer, you may have a separate trading division. You may want to track the bottom line or whatever, the financials separately. You may want to track the credits separately. So you have an option if you are a trader, apart from being a manufacturer or within, or if you are a big bazaar, for example, if you are a trader, you may have different types of trading. You may trade in apparels, you may trade in consumer goods, you may trade in cars. For each trading, for each broad class of trading category, you may want to have a segmental reporting or a compliance structure. For that, I think the concept of business vertical is a welcome change. The only downside here in the concept of the business vertical is each business vertical will have to be registered. So even though you may not have pan-India operations, within a state, if you are having more than one business vertical, separate registration, returns, assessments, audit, and things will follow. So compliances will be humongous. Then you have to do a cost-benefit analysis and see whether it is worthwhile for my trading business to be registered as a separate business vertical or no. Now, what is the advantage you have in a business vertical is input service distributor. You can distribute, amongst your, so if there is a common input services, you can distribute it amongst your different business verticals. I think that is the only advantage I see. From a tax angle, there may be other business advantages. You want to track your sales and profitability separately, administration, you want to put a separate CEO and it's a separate business unit. There could be so many qualitative considerations and quantitative considerations where you may want to register your trading vertical separately. So again, that concept is very, very new. And as Ramin has already mentioned, what is a business vertical has to be guided by Earning Standard 17, segmental reporting, and those same thresholds will define what is the business vertical under the GST law. Now, this is very, very important. They have come out with 5 or 6 different scenarios. At what point in time my sale happens? At what point in time my supply of goods happen? Now, this is very, very important. It's worthwhile spending time. Cycle sir would have covered this in the morning in detail, but we still quickly go through it. Now, as I said, there is no question of manufacturing. Yeah.
Just one quick question. wouldn't this be the first time that in case there is a big bazaar, he'd be able to claim his input service tax on rentals against his output?
Yeah.
Which
Yes.
was not there previously. This is
Absolutely.
the first time.
Absolutely. I'm coming to that. Yes, absolutely. There is Kishore Biyani's statement that I think annually they are paying some, I don't know, hundreds of crores just for rentals or the service tax, and that will directly be as a saver. But that's again, that's a huge game changer. I mean, imagine hitherto a trader was not able to take credit of services, right? So today, any trader, any shop, small, big,
I
big,
think that
mall,
would be a
bazaar.
big game changer for the whole trading sector.
Absolutely. So I'm coming to that. I have not yet started dwelling on the input credit points. So now there is a concept of time. At what point in time you are said to have manufactured goods? There is no point of taxation as far as the excise law is concerned. It is the only time of removal you have to pay the excise duty. So there is under section 6 or 7, section 7 of the Karnataka VAT law, point of sale or time of sale, sorry, not point of sale. Then under the service tax law, you have point of taxation rules 2011. Now, this is a combination of both. So, what is the point of taxation or point of supply, or at what point in time you should be deemed to have supplied the goods? Now, that itself is divided into 5 to 6 different categories. So, time of supply of goods under forward charge. Forward charge means I am not a reverse charge guy. I am a normal seller. In that case, what do I do? In case of goods, the date, the GST regime, the current regime is, what is the time of supply, removal and actual sale. Karnataka is one of the few states in India where section 7 of the Karnataka VAT law, the time of supply is either the sale or transfer of property or transfer of possession or incorporation of the goods in the works contract or receipt of money, whichever is earlier. So advance under Karnataka VAT law today, section 7, which is why it starts with a non-obstant clause, notwithstanding anything contained. Because the taxation event is on sale currently. Section 7 of KVAT Act says, even if you receive an advance, whether sale is happened or no, to the extent of advances covered, you will have to go and pay tax. One of the few states in India which taxes sale of goods on advance, which can be constitutionally challenged. So, sale, when I say under VAT law, is actual sale or advance. So that is deemed to be a sale. Now come under the GST regime. In case of goods, he could be a manufacturer, he could be a seller. The date on which the goods are removed by the supplier, when the goods are required to be removed, or the date on which goods are made available to the recipient. Now they have defined what is the meaning of date on which goods are made available to the recipient. For the sake of brevity, I will not go into it, which means they are placed at the disposal of the buyer, which means probably earmarked it, keep it in my godown, keep it in a separate corner, keep it in his warehouse, my warehouse, transporter's godown, warehouse, whatever. These are the two situations when they are actually removed, physical removal, or they are made available. Which means I am earmarked, I know this is for seller A or buyer A, B. Or, so this is just the first limb, or date on which the supplier issues the invoice, on which he receives the payment, or date on which the recipient shows the receipt of goods in his books or account. Now I'm not sure how you want to kind of monitor the last one, but these are the 4 or 5 scenarios, and earliest of them will be the point of supply. So you see they have virtually covered the universe. There is no other situation which can be possible here. Right? So specific dates now, what is the impact on the trading sector? Specific dates are prescribed under the GST law for movable goods, and goods are not required to be removed. It will be a negative impact on the cash flow, working capital, because advances are also subject to GST. Then there is a concept called continuous supply of goods. We've had continuous supply of services, which means more than 3 months and things like that. That same concept is now not there under the VAT law. There is no concept of continuous supply of goods. So there is a definition of continuous supply of goods, whether through a wire, cable, pipe, gas, whatever, or where the payments and the contracts is on a running basis, which means I am supposed to raise invoice on a continuous basis, monthly, quarterly, frequently, or I am supposed to draw a statement of account how much is due on a recurrent basis. That is the meaning of continuous supply of goods. So what is the GST regime? What is the point of taxation or point of supply? It is date of expiry of the period to which the successive statement of accounts or successive payments relate to. If not, it is issue of invoice or receipt of payment, whichever is earlier. So they are very, very clear. They are very, very clear what they want to do. Specific provisions available for determining the time of supply under continuous supply of goods.
So in case of a local sale, coming back to the question, in case of let's say an ex-factory sale, is it for all practical purposes local sale?
No, local sale is different. This is the time.
No, I'm saying, is it a local supply? If it's an
No,
export.
local supply is different. See, we will come to what is the local and the interstate supply data. I am saying at what point in time, see, this triggers your tax obligation to go and pay to the exchequer.
So the timing can be different?
Yeah. No, timing can be different based on these scenarios. That you are selling the goods one time or you are a continuous supplier of goods. So don't mix this with the place of sale. We'll come to that later. This is just at what point in time your liability to pay GST will arise. That's all. At what point in time supply is said to have taken place, which K.S. Naveen Kumar mentioned for services. Now we are speaking on for goods. So there is a separate time of supply of goods. There is a separate rule for time of supply of services. So time of supply of goods under reverse charge now, which is not there. So again, separately prescribed will be earliest of date of receipt of goods, date on which payment is made, date on receipt of invoice, and date of debit in the books of accounts. Now, what is this debit? Because we are all used to this debit credit business, right from beginning. So debit means probably recording it as an expense, as a purchase of goods in my books of accounts. So applying the concept of RCM on goods, the currently applicable for services, is going to hugely impact the trader community. So that guy better have a good accountant. You need good accountant now in GST. Now itself the compliances are rather onerous. You need good accountants under GST law. Time of supply on goods are removed before it is known whether actual supply will take place or not. So all my sale of sample, demo, free warranty, gift, donation, whatever. It is time when it becomes known that the supply has taken place, or 6 months from the date of removal. So you have 6 months to get your goods back. Otherwise, please assume you have removed it towards a taxable supply and pay it. Huge impact, cash flow, working capital, everything. You see the scenarios what is envisaged for a trader. Now I will not get into, because see, for every particulars we can have numerical examples, but that is not the idea. The idea is to speak about concepts. We can all sit on our drawing boards, whatever is applicable to our respective businesses and clients. But these are the concepts now which are newly introduced, which were hitherto never there under the VAT law, never there. Continuous supply of goods, reverse charge of goods. At the time of supply, you don't know whether it is a supply. These are all new concepts they are coming out with. And other cases, which are those other cases? In a case where a periodical return has to be filed, the date on which returns have to be filed. In still other cases, date on which your taxes have been paid. So the GST law has assured, under the impact column, that goods meant for any purpose, whether for sale or otherwise or sample or for approval, will be levied to GST. Very, very clear. So I think this is again one of the very, very important points, specifically from a trader perspective. Then valuation. Naveen Kumar has said valuation. I will not get into the valuation section of the rules. I will highlight certain key issues. MRP, specifically for the consumer goods or pharma products. That concept goes forever. Central excise 4 capital A, section 4 capital A. Mainly they are consumer goods liable to MRP taxation from 14th May 1997. When MRP levy of excise duty was introduced. Under Karnataka VAT there is MRP on pharma products, optional. There is MRP levy on tobacco and tobacco products under Karnataka VAT, right? DPCO, Drug Price Control Order, Legal Metrology Act, and all those things. All those concepts now go away. You may still have to affix an MRP to comply with the Legal Metrology Act, but that will not determine your taxation now. What will determine your taxation is only transaction value, which is a very, very self-contained code, which is a copy and paste of excise and customs, subject to valuation rules. If the officer has doubts, quote unquote, he has reasons to doubt the accuracy, and if 2-3 other situations where you will be shifted to valuation rules and things like that. Right? So there is only transaction value now. For everything there is a transaction value. There is no market value. There is no tariff value. There is no MRP. There is no production capacity based levy. There is no there is no levy of length into weight. into whatever, it is only transaction value, which means the intrinsic economic value of a transaction. It is very, very baseline. Now, I don't know whether can you apply the same yardstick across industries, across all sectors, across all consumer goods, but that is what it looks like. Maybe there are ifs and buts down the line, we don't know. Now, what is the impact of this on the trading industry? If anybody of you has the chance to look at any bill, and I am very curious as an indirect tax practitioner last 15 years, anything I buy, I look at the bill. You tell me what you have charged me for. I've had so many discussions, more than me spending time to buy a shirt. I've spent time at the counters discussing the guy who's issued me the invoice, honestly. I mean, I can't help it, we are all indirect tax, some of the indirect tax guys are like that only. So once I had gone to buy one shirt, value sent, he's giving me discount. I was very happy, but when I calculated, for him to calculate VAT, he did not consider that discount. Then I went back home and checked my VAT Act. Discount is not allowed as a permissible deduction for MRP taxation. Now, all these issues will go away because when you come to the valuation rules, normal trade discount is allowable as a deduction. Be it an MRP product or non-MRP product, he may still show an MRP to comply with the Legal Metrology Act. See, what I am speaking now is hardcore trading community, either B2B or B2C, as the case may be in your scenario, right? So transaction value to be based on valuation, clarity on, there is clear clarity on what is included, what is not included, which is good. So I am preferring, I always prefer, I don't get scared or enamored by the length of the law. For me, certainty is what matters the most, because you can consume the length eventually. You can't consume uncertainty. Nobody likes uncertainty, be it the buyer or the businessman. Because one thing people can't digest as a human is uncertainty, nasty surprises, which is why we want clarity in tax laws. To that extent, I would say it is a welcome change. Right? So the provisions are one-sided, as K.S. Naveen Kumar also said, but at least we are clear. At least we know what we know. There are situations where we know we don't know. There are situations we don't know that we don't know. That is the worst thing to be in. So now at least we know what we know. Or we know at least what we don't know. That is better, no? You understood? Sorry to be so complicated, huh? But I can't help it. I can't help it.
What will happen to the R&D cess in the case of intellectual property?
So again, those are, we have to just see the valuation rules. There is no specific deduction. Probably whatever the cesses are there, it will be forming part of valuation. Because if it is a consideration paid as a condition of sale or supply, not sale, as a condition of supply of goods or services, if you have to pay, in all probability that will be forming part. The only taxes which will not be forming part of the transaction value are your CGST, SGST and IGST taxes. That's all. All other cesses will be forming part. Unless they get subsumed in the GST. And probably we will have more clarity once the detailed rules are out.
So how it stands when the price is prescribed by some other regulators, for example, National List of Essential Medicines. When to make it affordable to the common public for the very chronic therapy, they come out with a maximum price which pharma can charge.
Sorry?
This pharmaceutical company can charge the maximum price. Beyond that they cannot. In that situation, how it will move? Or in the auto sector where post signing the Paris Summit for the pollution control, if vehicle is disposed of, you'll be getting a cash credit. So how it will stand in this?
So that's what, see, basically everything and anything which forms part of your intrinsic value of the transaction value will be there. There are permissible deductions like discounts and things like that. The only taxes which will not be forming part are these taxes. Any subsidies, I think what you are referring to may be one of your questions if I understand correctly. Any subsidy by whatever name called is going to form part of transaction value. The valuation section 15, all the rules are very, very clear. Now, when they say any subsidy by whatever name called, we'll have to see what is that subsidy, what is that cash credit, what is that cash incentives, what are those interest subventions or the capital subventions, we will have to see. Because again, these rules are very, very generally worded. I would not imagine they are interested in giving too many deductions. Because the valuation section is very, very tightly worded. They will give you only the prescribed deductions and not anything else. So whether you are charged MRP or no, that is for that industry, that is the reality of that industry. You will either have to work backwards and take out the transaction value. Because if that MRP is there, it will be inclusive of all taxes. Now how much is the IGST or CGST, SGST? You have to work backwards, take out transaction value, apply that and then close out. That is how it will work. So MRP concept done with, transaction value will be a boon, positive impact due to inclusion. Now one important thing now, FOC supplies will also be includable. Post-sale discount hitherto is a subject matter of huge litigation under the Karnataka VAT law. We've had a lot of case laws. Post-sale discount today under the Karnataka VAT law and a lot of other states. If you want to avail deduction as far as the discount is concerned, from total turnover to arrive at the taxable turnover, that discount has to be displayed on the face of the tax invoice. Which means post-sale discount, seasonal discount, end of the sale, end of the season, end of the quarter, end of the year, take off discount, there could be hundreds and millions of type of incentives given to either your customers, buyers, dealers, distributors, stockists, whatever name you call it. Those are a subject matter of taxation today. Those will not be a subject matter of taxation under GST, subject to 3-4 very, very clear conditions. What are those conditions? That post-sale discount, first of all, you can link it to a particular tax invoice. Then that post-sale discount should be mentioned in your agreement with your buyer, assuming a B2B transaction. Then when you are doing the actual supply initially, you know that there is going to be a post-sale. So there has to be a complete clarity and transparency in what is the dealer incentives as a trader or a manufacturer you are tomorrow going to give, if you want to avail that benefit. I think again that is hugely beneficial to the trading community, subject to complying with those 3 laws. Now how you need to comply, you have to change your customer or vendor management policies and things like that. You have to make sure you change your contracts and things like that, right? Very, very important, and for you to track it, so you have to have a good accountant again. Subsidy may be forming part of transaction value. Wherever there is a reason to doubt, transaction value valuation rules would be resorted to. Company will also need to track each post-sale discount to the relevant invoice. So this is as far as the valuation rule. Now not get into other, because all that is whatever earlier if it has been spoken, the same thing applies. Transaction value between a buyer and seller, where price is the sole consideration and where they are not related. Even though they are related, if it does not influence the selling price or the transaction value, the transaction will be allowed is that. So these are the 3-4 things purely from a trader perspective. This will impact because these things are not there today. Subsidies, discounts, those are not there today. They will not be there tomorrow. Subsidies will be included, discounts will not be included, subject to conditions. Now, the other game changer for the trading communities, as I said, different rate of taxes for the same product all over India. We are hoping that under GST scenario, the same product will not vary too much as far as the rate of taxes is concerned. They will operate in a narrow band. I'm not sure. Probably Sai Prasad and some of the other way would have covered. Right. So we may not really have a huge disparity, which means one product will not be chargeable to 5% and 15% across India. It should operate within a narrow band. The GST Council will prescribe how much is that narrow band, 0.5%, 1%, plus minus is allowed to differ to take care of the state's immediate revenue needs. So again, by and large, what we are expecting is uniform rates and a single system of applicability. So we are looking at a simplified system of taxability, which means for the same item, the CGST and SGST rates should be the same across India. Now we come to credits. Again, that is a huge game changer in more ways than one. Cross utilization of credits, which means a trader cannot today avail service tax. I think somebody mentioned rental, Big Bazaar, 300 crores. I think that is a reality. Today, if I'm a trader, I'm paying my chartered accountant for audit, I am not allowed a credit. Today I am a chartered accountant but I purchase a computer, I am not allowed a credit. All those things will go away. But SGST credit will be allowed only against SGST and CGST will be. But goods and services will, because now both can concurrently tax goods and services. Again, huge game changer. Then again game changer is the CST. I'm sure we all know this. Yeah.
See, while we are talking on inputs, the whole business is becoming IT driven. But the ability of a trader or any person to claim his credit would be dependent on the fact that the telecom service provider gives an invoice which is bearing his number and he files returns with those details. This is going to be a big problem because none of the telcos, I think, have even thought about this, that they would have to supply invoices whoever is claiming this input.
Yeah, so anyway, that thing is still there, but I don't think so any telco will not supply, because today also, if you see most of the companies, they are having their telco bills and things like that. So that telco is one example, there could be numerous other examples, but people, any business, I would say, any sector will have to eventually fall in line.
I agree, but it's going to be a big challenge for...
Everything is challenged under GST. Nothing is going to be simple.
Get the inputs.
Absolutely. See, as long as I'm getting credit, it's not an issue. Then, trust me, the government does not really bother your compliance burdens or my compliance burden. And that is the reality of the live with. Now, cross-utilization of credit is again one huge game changer, specifically for the trading community. So, I have large godowns and warehouses. I can straight away avail the input credit. It's such a wonderful thing, right? Especially for the big boys. And by the way, even for a small trader today. For a small businessman, even a 10 rupees matters, right? And credit of interstate transactions. Today, a CST. Now, CST is again directly, I'm sure we all know the concept of CST. Today, if I'm buying interstate 2% against a C form or full rate of tax without a C form, it's a cost to the buyer, right? Under the GST scenario, the entire IGST is available as a credit to the buyer. Again, a huge game changer. I mean, that really is, if you ask me, at the core of the GST law. That really, the IGST credit being available, because if we are a union of states, right, we are a union of states, you cannot have trade barriers or you cannot have CST which is directly at variance with VAT. So the idea of GST is to remove these tax barriers. The idea of GST is on the same base to have a CGST and SGST. So if you ask me in simplistic terms, which are the two main game changers, leaving aside the compliance nightmare, on the same value, I will be liable to pay CGST and SGST, which means on excise portion, I will not pay tax. Plus on excise portion, I will not pay CST. Plus whatever IGST I pay will be available as a credit. There are ifs and buts for every sector, let's not get into that. Some sectors will always cry and weep. There are people who are positive who will always look positive. Right? So these are the game changers. Again, the CST credit, now that is really at the core and the essence. And I would say the way the lawmakers have envisaged this IGST law, I think is really wonderful. You must give full credit. Because the entire thing is going to be IT administered. How they administer it is their problem. Much the way how we comply is our problem. So you need solid backend systems to track real-time movement of every consignment in the country. That's going to be humongous. You're going to deal with millions of invoices on a daily basis, all India, real-time, 365 days, 24 hours. That is the, and if you don't have good IT systems, it just collapses. But it will. Today, 26 years, we have by and large accepted it, right? The IGST will happen like that only.
Yeah, just to add on this, there's a real success story in India government-led IT is NPCI, which is actually a replica of how GST is also getting prepared, also from the structure perspective, also from the administration perspective. Because I have worked in the payment space in the last 5 years, I can clearly see the similarities between how GST is getting envisaged as to how IMPS and NPCI and how UPI and all the other technologies the government is only leading. So I guess a lot of these things will fall into place.
Absolutely, they have to. See, because these are the basic things without which you can't even, you can keep talking about the law, but if your IT systems are not robust, you had it. And with IT will come some amount of rigidity, there will be this, systems notices thrown open, this, that, and let me learn, live with it. So, any automation is always welcome. The marginal traders is now, as K.S. Naveen Kumar also said, even the smallest of the dealers will now have to automate their accounting and compliance, which is there they are not used to. I mean, there are traders, much like the department people, the traditional, there are a lot of old school thought people, they are not even knowing how to switch on a computer. For them, it's like a atom bomb button. It's a mindset issue, you see. So you have no other choice to fall in line. And very well said, sir. Thank you very much. Now, another game changer. You see, every step is a landmine in a positive way. Game changer, credit of CVD, you will get. Right? Service provider is not getting, service provider is getting, trader is not getting, will be available. So CVD plus SAD will get converted into IGST. We are knowing that structure, right? I will not get into. So we have a customs duty, 3-tier structure, BCD, CVD, SAD. BCD will be a cost, is a cost, will be a cost, 10%, 5%, whatever. CVD is available as a credit to a manufacturer and a service provider, but not to a trader. SAD is available as a credit to a manufacturer, not available as a credit to a service provider, available as a refund to a trader. By the time you make money in this country, you are almost about to die. Huh? Now this CVD and SAD, hitherto which was sad, which was really sad, right? Where I have to go and claim a SAD refund under 102 of 2007 notification, where my millions and millions of bucks are stuck on 4% on the top line. The kind of impact customs has, no other law has, let me tell you, tax impact. On import value, you are paying 29.45% duty. It's huge. Stakes are high when you do international business. CVD and SAD straight away become creditable, irrespective of whether I'm a manufacturer, trader, or a service provider. It's a huge game changer again. Then traders registered as importers, or first stage dealers, or second stage dealers, they have to pass on this CVD and SAD credits. There is no passing on. There is no CVD credit not available to a trader, SAD refund available only to a trader. Everything is IGST, pay and take the credit. Marvelous. Marvelous system. Subject to whatever exemptions, procedures, this, that. Again, these are the conceptual changes in the last 50 years which will change overnight. So again, it strikes at the very core of my business. It strikes at the very core of my my operations as a businessman, as a CEO. Today, hitherto, which could have been a cost to me, is straight away I'm looking at a credit from a trader perspective. Passing on the SEMVAT credit, I said. Reversal of SEMVAT credit, Rule 6, if I'm a service provider also into trading, trading is a deemed exempt goods for the purpose of Rule 6 of SEMVAT credit. Goods and services, both credits I take, there is no concept of Rule 6. The only time the Rule 6 equivalent will apply is whether a supply is a taxable supply or an exempt supply, you will get a pro rata credit. Not the fact that you are dealing into goods and services. Now that is again a huge game changer, because the Rule 6 can be nightmarish to implement for a trader or a service provider who is also a trader. Because trader is a deemed expense, deemed to be an exempt service under SEMVAT rules for the purpose of reversal of SEMVAT credit. So these are some of the flavors from a SEMVAT perspective or from a input credit perspective. State and import, state duties, interstate and excise and VAT. So these are the ramifications to the trader community. Customs duty and again upper and entry tax is subsumed under GST, again huge game changer. Abolition of CST. Stock transfer I've already spoken. Interstate stock transfer, So if you have huge credits sitting in one state, do a stock transfer. You may not have an output. That other guy does not have input credit. He's got output. Just do a stock transfer. Charge IGST. Whatever credits you have, you can use to pay IGST. Your another branch or your entity or whatever your other office can utilize that. If you ask me, stock transfer is a brilliant tax planning tool, and it is good that it is a subject matter of taxation. Today, which hitherto is not. Today stock transfer, I may have a huge input VAT credit in one state, but if I do a stock transfer, I have liabilities in the other state. So I'm paying there, but I have a huge input credit here, right? So today, my input credit need not get piled up in one state necessarily. It may happen in some cases, I'm not denying that. But I can transfer my credits from one state to another. I can transfer my service tax credits as an ISD from one state to another or within the same state, assuming we have different business. So you see the game changers. Look at the positive things. There is a huge takeaway from these things. I'm telling you, these are all top line taxes. It will really change the way people do businesses. It will directly impact their sales, their pricing, their margins, their bottom line. Such is the ramifications. So do you agree with me on entry tax abolished, CST abolished?
This CST C-form will survive? C-form?
No, C-form will not, no, because there is no C-form. There is no F form, H form, I form, E1, E2, nothing. E-Sugam equivalent will be there if the consignment exceeds 50,000 rupees. Hopefully, E-Sugam today takes you 5 minutes, it should take 5 minutes, but your truck should not be standing at the check post for 10 hours. It should move within half an hour, 1 hour or 2 hours. It should move, it should move. So, faster interstate movement will only increase the volume of interstate trade. Now, another game changer, CST being abolished, it will just zoom up my CST volumes. So the manufacturing states will lose, the trading states will lose. Gujarat has a CST collection annual close to 60,000 crores because it acts as a feeder to the country. It is a manufacturing state and a trader state. Maximum traders in India are in that state. It supplies to the rest of India, which is why they were up in arms. They were the proponents or architects of the additional tax origin base, which has now been scrapped rightfully so under the GST Act. So manufacturing states may lose out, but it is the consuming states which will gain. Eastern states, northeastern states, eastern states, southeastern states maybe. There will be a shift in the economic activities. There will be a shift in money, and with time it is the economically weaker states which will come up. And because there is a seamless credit, seamless flow of goods or trucks, not much of check post issue, you just imagine what it can do potentially to increase my volume of interstate trade, which is what the idea of GST is. You should have India as a common national market. You cannot have trade barriers, tax barriers and check posts. Keep reasonable checks and balances. I'm not saying you have totally unregulated business. Keep some 1 or 2 basic documents, that's all. But don't make a truck wait for 10 hours at a check post. Otherwise it will only impact your capability to deliver to your customer standing in the other state. Right? So that is the game changer, that is the potential we have. Now it all depends on our administration, how efficient we make. IT systems will be taken care of. Then as Naveen Kumar said, what is the interface of the taxpayer with the tax authorities? I think the proof of pudding will lie in its eating. That will be the real test of GST. Assessments, audits, check posts. How much otherwise good or bad will be that? I think that will be really, determine the success and failure of GST. We have all the systems in place. Trust me, we have all the systems in place. And if we don't have, we will have to. We will have to fall in line. The government will have to fall in line with a robust IT system. The small traders now cannot evade tax. If you ask me, GST is not a tax law. It is a business law. It is a business reform. It is not a tax reform. It is an anti-black money law. Because till I don't pay input credit, you cannot get till I don't pay, you cannot take a credit. It is required, rightly or wrongly. Which hitherto you can do it under VAT or SENVAT. I can get you n number of bills, or I know n number of people who can get you n number of bills maybe. You can produce bills, I can produce bills. Without having your buyer to pay, I can take the SENVAT credit of millions and millions of rupees. In GST that will not be possible. Till your buyer does not pay, till you yourself have not paid tax, your return is invalid. Till you yourself have not filed the last month's return, you can't file the current month's return. It strikes at the very root of every economic activity in the country. So which is why it is not a tax reform. I would say it is a business reform, and it is a more so ever anti-black money bill. To an extent, definitely the parallel economy should come about. There is a very good chance. Because you have no other choice but to automate yourself. There are no thresholds for automation. Because everything is e-compliance and e-payment. How you educate yourself as a small dealer is left to you. Unless you form a gang of 10 dealers end to end, then you will be locally only. Then you cannot really grow. Then if you are supplying to, let's say, L&T, then you cannot never be a supplier to L&T or become an L&T. Then maybe you may be localized dealer. Now, credit, what is allowed?
There are many retailers who do not give bills at all.
Sorry?
There are many retail sellers who do not give bills.
Sir, the tax involved itself is the margin in the business.
Correct.
In India, 90% of the traders' margin comes from whether they will levy a sales tax or not. Let me tell you that, sir. That is the reason for a lot of the traders not issuing even bills. Those things will go away. Little bit if you are a supplier to a larger group, you have to fall in line. Unless you keep supplying to your own brethren.
Now also, as you have rightly pointed out, also there is a compliance rating mechanism as well.
Yeah, compliance, I mean,
Which will also make sure people fall in line.
yes, it's a very, very self-balancing ecosystem. Very, very means self-policing, self-balancing, you call it whatever. You have no choice but to fall in line. You have no choice but to fall in line. Now, CGST credit will be allowed to pay CGST and IGST. I just kind of rushed through, I have some last 10-15 minutes. We have time till what time, sir?
10 minutes.
Because when I see people coming from down, like you just now came, feel scared. It's like I'm getting a call from dressing room. Virat Kohli innings is declared. So sir, 10 minutes. Huh? He declared the innings this time, right? One good match that was. So I will not get out. I have to declare my innings. Give me 10 minutes. Thanks. Right? I will not much dwell into. We all know the credit mechanisms. CGST credit can be allowed only for CGST, and if there is surplus, it is IGST. It is in that order. You cannot utilize CGST to pay IGST and then CGST. Same thing for SGST, and IGST can be allowed to pay IGST, CGST, and SGST in the said order. Right? Input tax restriction is there for 1 year. Within a year of the tax invoice, you have to claim the credit. Karnataka VAT law has 6 months. Senvat credit rules have 1 year. Now, as and when you progress towards the year end, your oxygen of this time limit gets limited. Because maximum is the due date is till September 30th of the next year you can claim credits. So 30th March invoice, maximum time you have till is next 6 months. So after 1st October, theoretically, or after 1st October practically rather, the time limit is not 1 year for you to claim the credit. That is one thing. I will not get into job up because it's more of a manufacturing issue and service issue. Returns, there is no concept of return, revised return. We have 3 returns minimum, 10th of every month, 15th of every month, 20th of every month. How you find a good accountant is left to you. You have to treat your accountants as son-in-laws now under GST. Not sons, son-in-law. Okay. Number of returns to be filed. Huge negative impact, compliances will increase. It will increase. There are specific penalty provisions, I will not get into. Appeals and assessments, by and large, yeah, I mean those issues what Naveen raised, very, very practically relevant issues. On the same matter, assessment may be different by a central authority and a state authority and things like that. Appeals. Now appeal in dispute, as far as the current regime is concerned, the amount of pre-deposit does not include penalty, whereas under GST regime, it will include penalty. For state GST law, in serious cases, quote unquote, the pre-deposit will go up to 50%. Now this is the SGST law. I don't know why it has found a mention in the statute. Why only the SGST has got this specific provisions? It is rather unfortunate. There are specific penalties. There is a self-explained code of 20 different scenarios when penalty will be applicable, when general penalties will be applicable, when a lenient view should be taken for technical infirmity or technical mistakes. Right? So there are those well-defined codes, but again, you could be at the mercy of the bureaucrat. Exports will be exempt, refund, exports will be exempt obviously. Refunds will be allowed only if you have an inverted duty structure or if your transaction is an export. Now what will happen to all these EOU, STP schemes, Rule 5, service tax refund, VAT refund, SCZ refund, nobody knows. The entire exporting community, lot of them are traders. Foreign trade policy, there are some more than 10 schemes. Import duty neutralization schemes and export benefit schemes. Duty drawback, EPCG, advance authorization, DFRC, EPCG license, EOU, SCZ, Rule 5 of Senvat credit rules, Cert from India scheme rules, merchandise export from India scheme rules. We have no clarity. Area-based exemption, Jammu and Kashmir, Himachal, Uttarakhand and 9 or 10 northeast states. What will happen as of now today, there is no word. Now speaking to Navendra Kumar about a month ago, he is one of the architects of this book of the model GST law. We are proud to have Mr. Navendra Kumar from Bangalore City. He is one of the senior most and most knowledgeable tax officers in the country. He was pioneer for the first large taxpayers unit in Bangalore City. He is one of the person who drafts the draft GST law. What I am given to understand, the area-based exemptions will continue, but it will follow a refund mechanism rather than an outright exemption. That is what the understanding as of now is. The government has formed separate committee only to decide on all these sector-specific or export benefits. Once the law is out in November, December, we will come to know. transitional provisions, and given to understand Sai Prasad is taken. If at all there is a practical implication today, apart from GST impact assessment, what we all want to do for our clients or for our own businesses, please pay specific attention only to transitional provisions. We are proud to be part of the group last year in Bangalore where we came out with a booklet only on 35 to 40 different scenarios, transition provisions under the aegis of ICI. We presented to the Government of India, and I am very proud to say I was part of that group, and a lot of those provisions have found a mention in the transition provision in the model GST law. So transitional provisions are going to be very, very important on 31st March for all the 4 laws as applicable to you: customs, excise, VAT and service tax. What do you do? Your goods are lying with your agents, your goods are lying with your job workers. Sale done now but returned later. Price escalation contracts, long-term contracts, composition turning taxable dealer, dealer turning into composition, and so on and so forth. Goods lying with the branch, input service distributor. So many transition issues are there. 30 to 40 different scenarios. Again, I am not burden the forum with this discussion. E-commerce, again, very, very important. There is a tax collection at source provision for the e-com companies on behalf of the dealer. We all know what the basic model is. If assuming you are Flipkart or Amazon, you are just an online marketplace model, so to say. We all know, or we are familiar with that model. There is a registered dealer or a seller. There are thousands of sellers registered on these e-commerce websites, right? And they are performing sale through the e-commerce. The e-commerce just gives them an e-platform to come and do their business. 30%, 40% sale, or discount. Now today the taxation primarily is the dealer who is registered with these e-commerce sites. Karnataka government has had some amount of litigation with companies like maybe Amazon and all. There is some standoff on VAT issues. I will not get detailed into it. But come GST, the e-commerce will have to do a tax collection at source for sales taken through that commerce website. Because as per the FDI regulation, because most of these e-commerce guys, they have foreign direct investment. And as per the FDI policy of the government in India, you can't have FDI in multi-brand retail, so to say. So you cannot own inventory, you cannot purchase and sell inventory, which means you can just be an online marketplace. You have vendors registered with you. When you sell goods through your website, it is the vendor's invoice which will go to the customer or some other associate entity, and then you reimburse that money to him. Now what they are saying is, again, hugely impact on the trading community, and rather a very onerous compliance on the e-commerce sector is they have to deduct or collect tax. Whatever the money they collected from the end customer, out of that they have to collect that tax and remit to the government, file all the details of supplies happen through the e-commerce website. The registered dealer or the supplier or the vendor who's registered with the e-commerce guy, he will also upload all his sales. There has to be a match. In case of any mismatch, the registered vendor will be liable to pay the difference. That is the impact on the trading community. I'm sorry I have to rush through. Last 5 minutes, sir. Saturday evening anyway. Right. Now, what is the interstate supply of goods? Naveen spoke. If the location of the supplier, again this is a game changer. Today, last 50-60 years, we know what is an interstate sale. It has stood the test of time. The definition of interstate sale, not even a single amendment. Section 3, I'm getting a bit technical. Section 3, small a of the CST Act defines when a sale or purchase shall said to have taken place in the course of interstate trade of commerce. It just says when there is a movement of goods from one state to another in pursuance of a contract, it is an interstate sale. Now they are redefining what is an interstate sale. They are having 5-6 different scenarios. So one basic definition of an interstate supply, not sale, is, as Naveen said, location of the supplier and the place of supply has to be in 2 different states. That is an interstate supply of goods or services. And if my supplier and the place of supply of goods and services are within the same state, then it is an intrastate sale. Now what is this place of supply of goods? We have to be very, very careful here. We have place of supply of services which Naveen, for the sake of brevity, he did not get into, because we have 15 different rules to define what is a place of supply, and this again will be at the very, very core of the interstate trade and of the GST Act. Hugely contestable matters are there. I'm not trying to fearmonger. Now what is the place of supply of goods? And then with that I wind up. Supply involving movement of goods. When there is a movement of goods, the location of the goods at the time at which the movement of goods terminates for a delivery to the recipient, whether inside or outside the state, God knows, that will be the place of supply. So if I move the goods from Bangalore to Mumbai, wherever my movement terminates for the goods to be delivered to the supplier or to the recipient, that is the place of supply. So if my movement of truck stops in Mumbai, my buyer picks up or I deliver the goods to him, then that is the place of supply. Now how do I know whether that is a local supply or an interstate? See the place of supply, see the location of the supplier. If the location of the supplier is in another state and you end up supplying in another state, it's an interstate sale or it's an interstate supply. Then what is the second definition of place of supply? E1, E2 sales. Today we know transit sales are a subject matter of exemption. There is a huge amount of litigation. High C sale you call it, or I will not get into high C sale. Transit sale, E1, E2 sales, all these E1, E2 sales will go away. So if I am selling it to you, you are selling it to him, you are selling it to him, each limb of the sale will be a taxable supply. And if on your behalf I supply to him, your place of supply will be the place where you are registered as a business entity as per the GST law. So that concept of E1, E2, I think this is the single most ramification again for the trader community, because 90% of your E1 sales are predetermined, which means the buyer has already known before even the truck starts his starter, which is directly at variance with AMC Project Supreme Court judgment, which says that only during movement of goods you should know who the ultimate buyer is, only then you can divert the goods. The moment you know your buyer of goods right from beginning, it is no more a transit sale, which means each time you transfer the bill of lading, you have to pay the tax. That is what AMC Projects was all about. Same thing has now been put under GST. There will not be any transit sale exemption. The number of times you keep endorsing your bill of lading all over India, from Kerala to Kashmir and back, each time you please pay tax. Then when there is a supply which does not involve movement of goods, the location of the goods at the time of delivery of those goods to the recipient will be the place of supply, and then you look at the location of the supplier. If the goods don't move, so first scenario is where goods move, second scenario is the E1 sale, third scenario is when the goods don't move at all, which means if I have goods in Chennai, my buyer is in Mumbai, I am in Bangalore, I say to boss, those goods belonging in Chennai, please take the delivery. It is an interstate supply, even though the goods don't move in Chennai, because I am in Karnataka, the place of supply is in Chennai. Am I very clear? So these are again new concepts of interstate sale or place of supply is coming. There will be a lot of permutation and combinations in this. Obviously, I would not like to get into that. Then, where goods are assembled on a site or installed at a site, the place of installation of such goods at that site will be the location or the place of supply of the goods. Please compare it with the location of the supplier. If it is within the same state, intrastate. If it is two different states, interstate. In any other cases, as if this was not enough, determined by the law, by Parliament, recommended by the Council, what K.S. Naveen Kumar said. Thank you for a very patient hearing. I am open to some question and answer.
Sir, the E1, E2 says bid to ship basis. I am getting order from Mumbai and supplying to Kolkata. So say that goods are going from Bangalore to Kolkata.
Yeah.
Sir, the E1 sales, transit sales. I am getting order from Mumbai, for example. I am supplying from Bangalore to Kolkata. So I am raising a bill to ship to basis. So I am straight away sending the goods on a single bill from Bangalore, bill to Mumbai, ship to Kolkata. So now this GST is reason, how to bill it? So I have to bill.
So you will have to bill it to your Bombay customer.
Okay. Goods, how to move it?
No, goods may move to Calcutta.
Okay.
Goods may move to Calcutta. You will have to do the billing to your Bombay customer or Mumbai customer.
Yes.
Then the place of supply for your Mumbai guy, for your Mumbai buyer, the place, his principal place of business will be the location or the place of supply. And if that place of supply is in a different state compared to your location, it becomes an interstate sale. Then you have moved to Calcutta because he has told you, please, my ultimate buyer is in Calcutta.
Yes.
Then same thing you apply between your Mumbai buyer and the ultimate buyer. If they two are in different states, then he will raise a IGST invoice on him. If they both belong in the same state, then it becomes a local sale. That is how it will be. But each limb will be taxable. You cannot say, I have taxed only Bombay to Bangalore, Mumbai, and because E1 is Calcutta, that Calcutta limb will get exempt, which hitherto is exempt today. That will be taxable. That will be taxable. In all probability, that will be an IGST sale. You will raise an IGST invoice on your buyer. Your buyer will raise an IGST invoice on the ultimate buyer because the ultimate buyer does not know you.
Yes.
Your Mumbai buyer knows you. Calcutta buyer knows your Mumbai buyer. You don't know your Calcutta buyer.
What is the document I give to the transporter?
Sorry?
Transporter I need to give the invoice.
Only invoice or whatever your delivery challan is.
Okay.
There is a chance you may just need to give a e-Sugam equivalent because everything will be system tracked. And you don't divert it towards Sri Lanka, please.
Thank you, sir.
Sir, the visitor on board and the conveyance.
Yeah, one more, I think that clause was there. So when goods are supplied on board or a conveyance like stores and catering things, I think the place of, I'm not sure what is that clause, one second.
Shall I read it?
Supply of goods on board a conveyance. Location at which such goods are taken on board, which means if a flight takes off, you supply as a caterer. So the place of supply of goods will be when such goods are taken on board. You please pay. But if your food is not purchased by that guy, it comes back. You've already paid tax on that. So it is lying unsold, but tax is paid. These are the issues which will arise. Unsold goods, you have supplied. It is got consumed or not in the plane. The passenger may not choose to buy your food, sir. The moment you supply 100 boxes of emptier food on plane, you have to go and pay tax because your flight is leaving. It may or may not get sold in the air. It may come back. Tax already paid. Anyway, don't get into that. Let's just get into the basic provision. Supply of goods on board or conveyance. On board means on board, on the deck, on the vessel, on the plane, on the ship, whatever you supply. The place of supply will be the location at which such goods are taken on board. Physically, you mount those goods within that conveyance. That is the thing. Basically, place where you deliver the goods to the area.
In old act, it was the agent of mine or agent of him. If it is my agent, then it will become the CST sale. Like that, no?
So it is subject to, if you are delivering the goods interstate, so place of supply, if the aircraft is taken from Chennai and you are located here, and if you are moving the goods, then obviously it will be an interstate because the place of supply then becomes Chennai. It depends from when you are at which location you are placing the goods on board. If it is in Bangalore International Airport, it will be a local sale. If it is Chennai Airport, you move the goods overnight in the truck, there it gets on board, but you are located here, it becomes an interstate sale. But this does not determine what is interstate and intra. This determines what is place of supply. Based on place of supply, compared to the location of the supplier. If you two are in the same state, intra. If you two are in different states, inter. That is how it is.
On behalf of Managing Committee of Bangalore Branch of SAIC of ICA, I take this opportunity to present a formal vote of thanks for today's one-day seminar on GST. At the outset, I thank you, sir, for giving us an excellent presentation, keeping it very lively whole session. I request C.S. Shriram, Managing Committee member, to kindly come forward and present a memento as a token of appreciation and gratitude. Big round of applause. Thank you, Shriram, sir. I also thank morning session speakers C.A. Rajendra Kumar P, C.A. Sai Prasad, C.A. K.S. Naveen Kumar, and all the members for taking part in today's seminar and making it a successful event. And we have next study circle meet on GST impact on the SME sector by C.A. N.S. Keshava on 19th. That is coming by visiting the same branch premises. Interested members kindly take part. Thank you.